Welcome to Power Charting. I'm your host, Bruce Fraser. We're going to do something a little different and special. We are going to talk about Forex and Forex trading with somebody who knows an awful lot about it, and that is Roman Bogomazov. Roman, thank you so much for being here.
Well, I'm always happy to be at the Power Charting together with Bruce. Just one-to-one clarification. Yeah, I did trade Forex for an extended period of time. Obviously, I don't know everything about Forex, Bruce, but thank you for the intro. And we just want to put our Wyckoff layer of analysis on your thinking about the major pairs. So that's what we're going to do today.
Wonderful. And I'm excited to do this because I do follow the dollar, and I do follow some of these pairs on a very cursory basis. And to really dig in and do analysis here with you is going to be a lot of fun. And but first, Roman, you've got a course coming up in the fall. This is your normal course cycle that's starting up. Tell us about it.
Yeah, it's the flagship course that we have, Wyckoff Trading Course. Part one is all about analysis and some tactics. Right away, I want to mention that you could sign up for the complimentary session that is going to be conducted on August 28th at 3 p.m. This is an open door first session. This is a great intro just to see if you can commit to the intensity of the course. We do the homeworks each week. So it's not mandatory, but obviously, it's preferable. So I'm just telling you right away. And what are we going to study? Market structural analysis, which is an extremely important subject as to how the environments change. How does the change of character happen? What are the attributes of that? And then going from one environment, let's say trending environment, to non-trending environments, how does this happen? Then once we are in the trading range and the consolidation, we want to look at the Wyckoff phases and Wyckoff events. That's going to be very, very comprehensive. I love that subject a lot. And then we're going to transition into the volume and price analysis, supply and demand. The main Wyckoff law, in my opinion, that we would be studying is effort versus result, harmony or disharmony between the price and effort. And then that also includes discussions on the VSA, which is the volume spread analysis bar by bar, swing by swing analysis, and some historical analogs. Then we're going to have a couple of sessions on relative and comparative analysis. I know that a lot of you familiar with this, but we're going to bring our own spin. And I always like to establish really good basics for you so that you would know how to do this correctly. And then the last couple of sessions are going to be devoted to trade management. How do we get into the position? What's our Wyckoff trading plan? How do we move the stop losses? How do we add and trim? How do we exit? All of that, it will be discussed. And then the last session is just a Q&A. This is kind of like a foundational course that spreads from basic concepts to very advanced concepts. So it doesn't really matter which level you're on right now. You'll have to go through this as any of our students. And I welcome you to visit our first complimentary session. Bruce.
Wonderful. And I am going to put in the YouTube description the link for you to be able to go in and register for that first complimentary session, and certainly find out more about how it works. And I have to say this, and this is from the heart, Roman. I've worked with you for, gosh, maybe close to 30 years.
Yeah.
And I think that Roman is going to be considered really one of the all-time greats in Wyckoff analysis, and he's a great educator. And I just think that Roman is, anybody who's able to study under Roman is very, very fortunate. This is the way to learn Wyckoff. So
thank you, Bruce.
I truly mean that from the heart, Roman.
I really appreciate this, especially coming from you, a legend in our world. So, I mean, it means a lot.
And with that, we're going to talk about Forex. And so what do we have first here?
Well, this is the euro against US dollar, so this is the major, and we definitely want to start on the higher time frame. So, Bruce, we're starting on the monthly time frame. Now, one of the big distinctions with Forex currencies and pairs is that they are really trending. If the trend is there, it persists. And obviously, the second attribute to Forex trading from my early days was that Forex is definitely volatile. If an exporter importer comes in and they need to buy one currency or another, they don't care where the price is right now. If they need the money today, they're going to dump it, they're going to buy it. Also, government interventions create a lot of volatility. So on the daily basis, you're going to have those like volatility spikes, but generally very trendy. And Wyckoff analysis could be applied easily, to the price structure alone or to the price structure and volume as well. Now, there is a big question about the validity of the volume signature on different, software platforms. It's a very valid question, and I've been asked this question many, many times by our students. And I'd say that whatever volume signature you could find, it's still going to be relatively okay for you to use in your analysis. But if you're a super advanced analyst, Forex analyst, or Forex trader, you don't even have to use the volume. You could use a price to extract the actual volume signature from how the price moves. So this is kind of like a prelude, a prefix to our discussion. And Bruce, again, this is a monthly chart of the euro against the US dollar. What catches your eye? What do you see here?
First thing I see, and this is sort of the way I approach charts, is that I want to draw that downtrend line from the peak in 2008, which is a climax. And I just see this beautiful downtrend. And I think that that is sort of the overarching force that is working against the euro. You can see that we're approaching that trend line above, which we would call the supply line. And that also comes with a couple of things that I see, which is a spring type action. I would even refer to it as a deeper than a spring, a shakeout. And that with that came a reversal right back up into the structure, back above support. And I think that is really important, Roman. The other thing about this is it's rallied up to the overarching supply trend line as it's losing momentum at the trend line, which makes me believe that a return back to support might be directly ahead for the euro. And your thoughts?
All right. Well, I like this definition of the downtrend. Within this downtrend, we kind of see the structure, right? So we see one structure right here. Prior to that, we see another structure. At the beginning of the introduction of euro, we had this, famous, apex that was resolved, heavily to the upside. And the reason why I remember this because I was trading during this time, Forex. And let's just think about structures. Let's think about the characters of the structures and what that character or the price structure tells us about the bias, because that's the main question, right, guys? What do you want to know? You want to know whether the price is going to go up or down from this point. I would say, Bruce, that this is a very volatile structure right here. This has such a volatile change of behavior that suggests not only the change of the environment into the trading range, but the aggressiveness of it, the ability to negate almost all of the gains that we had during the climactic run suggest a bearish bias. And after that, we see just confirmations of the bearish bias, inability of the rallies on all of the attempts to retest the buy and climax high. That's number one. The minor sign of weaknesses that we're seeing at two places that undercut the support, number two. When we look at the character of the reactions, let's say 1, 2, 3, and we compare it to the rallies in between those reactions, let's say 4, 5, and 6, and especially 6. Look at this rally. The rallies are actually diminishing in strength, and reactions are actually kind of staying still aggressive. So with that, that would lead us to the conclusion that this is a distributional range, and especially after a weaker rally that goes and retraces 1/2 of the change of behavior, this is where we would be positioning ourselves to the downside. This same analysis could be applied to the next structure. We have a stop in action, selling climax. We start to define the trading range, initial trading range, then we increase the size of it. And here is our structure. And with that, I would say that either this is phase A, which is usually a stop in action of the trend, right? So we were going down, now we're stopping. And with that, we're changing the environment to the trading range. Or you could even extend this phase A with multiple tests, and then look at what happens here during this trading range. Suddenly, the rallies become, somewhat more aggressive than, let's say, the reaction. When you compare this rally to this reaction, you could see on the reaction maybe initial push down, but then after that, the selling is shows diminishing supply and also diminishing result in the spread and then the shortening of the thrust going into the higher low. And we could say that the next rally does not lose a lot of momentum, obviously some, but still it's relatively good rally. And then when we are looking at the last reaction, one might say, okay, well, the distance hasn't increased. But if you would compare, let's say, this rally as a measure of the breakdown, potential breakdown and extension below the structure, and we would compare it to the previous instance when this happened, we kind of see that both the character and the result changes somewhat. The character here shows us that the downward spread is actually decreasing. So, and this is bullish. And we're seeing that the extension to the downside, especially into the close, into the monthly close, is decreasing as well, meaning that there is a shortening of the thrust, there is less selling. And then what comes after that is extremely important for us Wyckoffians, as Bruce has mentioned. The recovery out of this shakeout spring event is pretty dynamic. Look at the bars to the upside. They take us into the almost higher part of the trading range, almost there. So this type of the recovery is usually going to be associated with the spring or a shakeout event and with the extreme buying that comes in. Now, could we confirm that institutions have come in and actually bought at this place? When we look at the volume signature, we see the swell of volume there. This is suggestive of both increases of supply and demand. Supply increases because weak hands are giving up their positions on the way down. Demand is increasing because institutions are coming in, absorbing that supply. That produces the local stop in action, and that quickly reverses the price up and returns the price into the trading range. So to me, Bruce, I would say I see this as a long-term bullish case for the euro against the dollar. And I think, as you said, we just went through the shakeout / spring event, and now we're in some kind of testing. And this testing could take different shapes and forms. We could have, complex testing. We could have very simple testing. So I would start developing scenarios here, long-term scenarios. Continuation to the upside, almost immediate. Second scenario, consolidating more for testing. Third scenario, maybe a deeper test and then the recovery. So considering this, I would go to the daily chart, Bruce, and I would just look at the daily chart and see more definitions, more details on the lower time frame.
Mm-hmm. I would say that the only thing from a Wyckoffian perspective that I would like to emphasize, because I love your analysis, 2015 is a classic selling climax. Widening spread, high volume, down into a stopping action, which gets reversed into some kind of a range bound condition. Notice how that selling climax low informs the support levels in this chart going out all the way into 2023. And that even when it went down through the shakeout through that support level, you can see that those declines are labored, that the each one of those bars has got a tail, very high volume, especially into the conclusion, some of the highest volume on the chart. That stops at the trend, which shows that there's elements of good demand inside of that last couple of bars. And then it turns back up in. And so the selling climax, I believe, could continue to be very important, because if there is any kind of an attempt to pull back, which may not happen, as Roman pointed out, that selling climax low is going to prove to be very important support, and it may not even be able to get there. And what I would look for would be any attempt to pull back coming on diminishing volume, and showing that really that the overarching supply has been taken up by strong hands. The only other thing I could say about that decline there into the shakeout low is that it had, in addition to showing signs of demand, especially as it broke through support, I do believe that the CO types are going to want to see whether or not they can shake loose supply. They're always asking that question: is there more supply down here to absorb? And I wonder if that might be the reason that we do get an attempt to go back down to the selling climax low, just so that they can see whether or not they can break loose some more supply, because of the the magnitude of the nature of that drop into 2022. So anyway, I just leave it at that.
Let's look at the daily. So here's your more detailed definition. I'd say, okay, so this is the 22. So here is that in 22, a shakeout or a sprint, and then the recovery on the daily. This is how we see this, right? So local stop-in actions, test, another stop-in action here. You could create here more of the downsloping trading range like this.
Looks
I'm
like
not gonna,
has like a downsloping accumulation is how
yeah,
you could
yeah.
characterize it.
But the key here, obviously, because this is a very specific pattern, which we actually study in WTC1, the downsloping trading range will always be associated with still persistent selling that is starting to diminish. But yet, because of that persistent selling, we are going to have lower low, lower low, lower low, and lower highs. So the key here is to start seeing the emergence of the demand. The emergence of the demand could come from two places. It could come from buying on the way down by institutions, and it could come from buying on the way up by institutions. And usually when we see the buying on the way down, we're going to see the stop-in action itself. We're going to see the shortening of the thrust, contraction of the price spread, and increase of the volume. That will be a hidden demand. On the way up, buying will create acceleration in the momentum and velocity of the price going up. And with that, you're going to see the price spread increase, which we're seeing here. You're going to see increase of the demand and volume increase in general. And more importantly, what's so important here is that we're going to see the expansion of the upward result. And usually the first extension of the upward result will resolve itself into a sign of strength, which is being followed by a backup action. And we see that, and we see minor attempts to produce that sign of strength. So for instance, like this one is a minor sign of strength, major sign of strength, overcoming the structure, extending significantly, and then backing up to this resistance right here. So it's just almost like Bruce, picture perfect with the variation on the downsloping horizontal trading range.
And of course, the thing that stands out is the late September lows, end of the quarter, and then higher low in October, with volume on the rally off that higher low in November, with volume coming off of that higher low. Those are two very important standout points on this chart, because it's a total change of how this pairs, the euro pair, is trading. And so then the rally off that November low is a very important event, because it's a sign of strength that's able to take out really two forms of resistance overhead. So, and then this is always a big tell for me, something I look very closely at, is when we get into the backup, look at how the volume is just absolutely diminishing to an extremely low level on that backup, which shows that supply has been absorbed, the currency is in strong hands, and it's going to produce higher prices. It's a beautiful chart, Roman.
Yeah. So let's follow what's happening afterwards. So lots of buying in this area right here. Look at the volume signature, right? This swell of volume tells us demand is present. Does it produce the result? Absolutely. Now, what happens afterwards once buying is not as aggressive, right? Slowing of the momentum, very natural thing for the uptrend to unfold. So you have to understand how the uptrends unfold. And this is just like step number 2 or step number 3, and so on and so forth. Then we go into a change of behavior. So here we start thinking, change of behavior is going to lead to some kind of trading range bound action. We do have that. I mean, like we just having it again in the upsloping manner, and we are testing this whole rise. So please note that the first initial change of behavior reaction does not necessarily go that low relative to the extent of the whole rally, right? So I would say maybe like what, maybe like 30% retracement. This is very healthy. It's not even half. It definitely wanted to go to this level where the buying has stopped, and it didn't really touch it that much. And then right away off the bottom, we see how demand is coming back, and that is a really good sign. So this tells us that institutions are willing to buy at the higher level than before. So this means that they're thinking that the prices are going to go higher, and with that, they are buying more. Then after that, there is nothing that's going on. This is a period of inactivity. There is no distinct increase in the volume signature, either supply or demand. So it's almost like, the price structure is on its own. So the key question during the period of inactivity is all about result. What is the result of what happens during this area? We're still relatively going up. So I still would be bullish here. And then how do we go up? I look at the reaction, small spread, low volume signature with lower supply signature, which suggests to me that still it's pretty healthy and it's pretty normal, in the correction to have those type of declines, which are bullish declines. And then right away, we see that increase, in volatility to the upside, increase of the spread, consistency of buying right here, and it's definitely, should be considered bullish. So Bruce, I'd say like the only question that I have about this daily chart is really about the last reaction. Could we stop here? Could we support this level and then continue going up? And that's about it. My long-term campaign ideas are still going to be to the upside.
I completely get it, and I would say that one of the things that really bodes well for an upward trend, the May decline, if is a decline that is pretty persistent. I don't think it's quite as bad as the February-March decline. So maybe there's a slowing of the downward momentum. But then if it can stop here, this July decline would be the smallest of the 3. The other part is I love the way in June and in July you had a really good rally phases on expanding volume, widening spread, and making new highs. And I believe that those are all characteristics of a strong uptrend trying to resume itself. I would say then the next action to confirm this would be an attempt to get above that level number 3 there, and then be able to hold and not come back at all. And also note the June pullback, which occurs in the second half of June, is quite shallow and narrow, diminishing volatility throughout. I think that's very extremely supportive of an uptrend also.
Mm-hmm. Yeah. Okay, let's go to the next pair, British pound against the US dollar. And as you guys know, for those of you who are Forex traders, those two pairs are at times highly correlated. I usually love this technique where you play one pair against each other and you do the comparative analysis and you buy the strongest, you sell the weakest. You could actually create spread or pair trading in Forex like that with euro and British pound. I also would suggest going and finding the website that show that correlation on a daily basis because it does change. It's never like necessarily like at one, it could be like a half to 0.8, and it just changes. But there's gonna be predominantly like similar structures for euro and British pound with the elements of weakness and strength. So Bruce, we're probably looking at the same type of analysis here where we have the stop in action, we have the change of behavior with automatic rally, we have multiple tests, secondary tests here, we have a shakeout event or a spring event that again has this increase in the volume signature behind some buying by institutions and then almost immediate recovery. And I'd say that the test here on the local basis looks a little bit better to me. What do you think?
Yeah, and I think that the whole structure going back to 2016, which makes it a huge structure, is really kind of a more traditional accumulation type event than the one we just saw with the euro. Euro was a little different in the way that that accumulation area unfolded, and this looks very interesting. And again, the only thing I would say is selling climax should be very important support for this. Look at the volume off the lows there in late 2022. And so any kind of a pause, I think, would be, or pullback would be quite shallow and should be accompanied by low volume. And if it happens at all, it may just start to work its way up to resistance, which is very well defined on this chart. And the only other thing I would add is from 2009 to 2014 is just a classic redistribution. And to develop an eye for redistribution is so important. Reminds me a lot. Now look at the scale of this. This is like 2009 to almost 2015. I mean, you could even say that because there's that LPSY in there. That's the reason to be looking at monthly charts, because that is the backdrop that you're operating in. And this structure reminds me a lot on a fractal scale of the triple Qs or the NDX after the first break in the bear market in 2022 in the spring. And so very similar, you might compare them. People might have a look at both, but just time frames are different, and but very fractal. And so just most interesting. So with that, that's really all I have to add to that chart other than.
Bruce, one more thought, and let's go to the daily after this.
Sure.
So recovery out of the spring or shakeout position. First initial move, 1, then testing, 2. Kind of the same here, right? So we are recovering. This is from last point of support. We are recovering at 1, and then we are doing the test at 2. So please note how there are some similarities to this, right?
Yeah,
Whereas, Bruce, look at this. This is a spring position. We have 1, the first initial push. It pushes us, correctly into the trading range, back into the trading range. But look at the test. What kind of test do we have? This is not as bullish of a test at 2,
close.
yeah, than we having right now, and then we had in 2002, 2003. Same here. Attempt. One might say, what about this spring? I would say spring type event rather. 1, and then what is the test? Like right away, we are negating everything here. Again, here, look at this spring, and then push 1, we need momentum there to buy, test 2. So quick, difference there. All right, let's look at the daily.
Nice nuance. And go ahead, Roman.
Bruce, the only thing here, it's definitely behaving better than the euro. right? So the British pound is stronger. We're seeing this last climactic surge into the buying climax. And I mean, here, the price, is allowed to come back to the previous resistance that is acting right now as the support, where we stopped originally right here, and then we advanced, from this smaller trading range. This is a backup action here, sign of strength, maybe a minor sign of strength, and then we go up. We stop with the stop and buying climax. So far, I don't see a lot of volume signature, so I don't see a lot of selling. So this is kind of orderly, normal selling to a potential backup action. And again, the pound has all of the right to come back to 125 or slightly lower, into this area right here, which acted before as the resistance, now should act as the support. Bruce?
I don't see any big obvious sign of supply coming in off that peak. Classic July sort of local buying climax, and then a reaction, and it's going down, and the volume isn't. You can't say here on that chart that you have volume off the peak. Where
Mhm.
in classic topping action, you'll get this big surge of volume that'll occur off of the final highs, which shows active selling going on. I'm not seeing that, Roman.
Yeah, yeah. And it doesn't mean that we are done with this correction. So this could
Right.
be leg one. This is the attempts to rally in between, and then one-to-one relationship could bring us, like even to this level right here. So I would be looking at how the price interacts with this level, because again, the importance of the stopping and absorbing the supply at this level is going to be important, because demand comes in, and we need to see that demand can do this again. So somewhere here in this area. So this is a question mark for now,
And
but
that is
non-threatening.
that December to March, April period, and then including the backup in May, is a classic reaccumulation as a contrast to what we saw in the prior chart. Yeah, really beautiful. And I love in February the way it goes down, and look at how haltingly it drops and is unable to like get any kind of a head of steam going to the downside. Springs at the lows, but note that that spring low bar does not appreciate or have a large supply characteristic to it, which is a classic spring. You can buy a spring that does that right away. And for those that like to buy springs, because there's no massive obvious supply presence at the breakdown. And so that shows that the decline is truly exhausted, which was, actually tipped that was happening in the February decline.
Mhm. All right, let's go to another pair, and this is US dollar against Japanese yen monthly chart. Wow, Bruce, what a structure. What do you think about it?
Yeah, this is fascinating because the 2015 to 2018 period, you just see just all of this volatility coming out of this pair. And so you have diminished volatility right down into the low. It doesn't spring those prior lows like to the 2016 low as it has before, which in and of itself shows that test on relatively low volume at the end is that the dollar is tired of going down there. And so uh, and then off of that, look at the dynamic nature of the rally in 21, and then upward from there. Vermont.
Mhm. Yeah, so bullish here, bullish on the change of behavior, contracted volatility, as Bruce had said. So bullish character behind such a decline for, wow, 4 years. And then after that, finally, we're changing the behavior locally, and that resolves into extremely high momentum. And now we're seeing another change of behavior that is suggestive that we are in the trading range. So I would be thinking, Bruce, here, just because supply is somewhat high here, that we are losing the steam, for the upside, buying forces. So I'd be thinking probably, just at least short-term retest of like around 150, slightly above that, and maybe just another test and then continuation, or question mark, how does this gonna unfold going forward? Is volatility gonna increase or something else that we're gonna see? So it just depends. We could definitely see probably more details here on the daily. So here's that big change of behavior. Let's study this for a second. So we're seeing how supply comes in, doesn't produce a lot of result to the downside, but volatility increases. Second time around, on the same type of bar, we're seeing that there is no continuation to the upside. So here we would be concerned, and this would be one of our exit points, depending on the time frame that you're choosing to trade. This is pretty aggressive. So this suggests that, yeah, I'm gonna be going down for some time. So all of your trades are going to be positioned to the downside with the counter trends to the upside. All of the counter trends trending rallies are of the same size, and then suddenly this comes. So this is a local change of behavior with the test that comes to the higher low, with the suggestion that some demand is available behind this swell of volume and on the higher low. Testing after that. So still testing shows that, there is no ease of movement to the upside right away. And there is still, some pressure to the downside. So that those type of patterns usually are going to resolve into some kind of momentum, which is a locally increased momentum. This is not like the highest momentum that I've seen on the daily for the Japanese yen. And with that, we are coming into the most important bar right here. This is the breakdown bar. And we are intruding into this bar, which is a great sign. Our next reaction is not that deep, and by the magnitude of the same magnitude as the previous reaction. So now we could think like, okay, is there some kind of channel here? Yes, and then we have some long-term targets around the selling zone. Again, this is the most important bar. So our selling zone, and we're right there. So I think that we're going to be, Bruce, we're going to be trying to attack this selling zone. And then once the price is here, we need to see what kind of result we're going to have for this and what kind of character we're going to have for this. But for now, I would be still short-term bullish. With the possibility of some kind of retest. What if we are gonna have maybe like look at this one and then retest at two of kind of like this shakeout action here? What if we have maybe somewhat the same and then we try to go up and retest this area right here? Bruce?
Brilliant analysis. The only thing I could think to add is that you have these series of really climaxing down bars. December, big climaxing decline on volume. January, another one that goes to a lower low. And then note at the beginning of February, higher low. And that's a really important event on that chart. And you can see later on, especially when you get out to May and even June with that backup, that this whole structure back to early December, late November is accumulation. And you can see that it's a cause building process and that it's accountable from a point and figure perspective. So then you have another higher low in April, late March, early April. And so you have a real change of character taking place here in the way that this is all acting. And I'm sure that the pessimism was quite high at that point, but there was no longer any momentum to the downside at all.
Mm-hmm. All right. Well, Bruce, I think that's it for today. Again, just a reminder to sign up for the complimentary first session of the Wyckoff trading course, or just sign up for the course. I'll be happy to have you on board, and together, let's work together through this whole semester, go through all of the homeworks, go through so many concepts and definitions, and let's get your ability to read the chart to a higher level. So when people come to us, they usually ask me or anyone else on the team, am I gonna make money? This is such an interesting question because I don't know your emotional landscape for trading, which is a big part of your success story. But I can guarantee you one thing that you're gonna get from all of our instructors and from all of our classes. By the time you're done with us, and if you've done it properly with all of the homeworks that we ask you to do, with all of the simulations that we're doing in classes and so on and so forth, you will be able to read the chart better, way better, significantly better. And that's our promise to you. Bruce?
I think it's a very, I don't think there's a better approach to the markets than the Wyckoff method at all different levels. And I just can't encourage a really devoted chart reader. I can't encourage you enough to immerse yourself in this material. And I just think of no better way to do this than to do it with Roman, who I consider the best educator on the Wyckoff method there is anywhere right now.
Thank you
So,
very much, Bruce. I
and with
appreciate it.
that, Roman, thank you so much for being here. That was so much fun.
Yeah, absolutely. Let's do this again. And this was by the request from our YouTube subscribers. They were asking us to do more of Forex. Here you go, guys.
Wonderful.
Yeah,
Well,
especially
let's
for
see what we can do to get Roman to come back more often.
absolutely. Let's do it more.
Wonderful. Roman, thank you so much for being here.
Thank you, Bruce.
Take care, everyone. We'll see you next time.